Hi, this is Dan at Master Trader, and I just wanted to give a quick market update of what we have been looking at in the broader markets over the last week or so, and then what our game plan is for today and the next couple of days. Here's the SPY, the S&P 500 ETF. You can see last week, Monday, Tuesday, Wednesday, we were actually bullish on the broader markets, daily, weekly, and monthly. And then the selling started last Thursday and Friday. It set up what we called a measured move down because the market internals were not at the bullish turning point yet. So we advised all of our subscribers to trade very cautiously. We didn't know if this was going to hold, but we were hoping on lower prices like we got to get the market internals in a more bullish signal territory. Here are the market internals that we follow. Breadth, sentiment, and I'll show you the volatility index. Up here on the upper left is the SIBO volatility index. We call it, we use it as a sentiment indicator. When the market sells off and the wrong way option traders are out there in fear, loading up on buying puts, that signals an impending market turn. The moving average that we use is also in clear overbought territory, which is a bullish signal. McClellan oscillator is also way oversold. So these two have done their job of telling us that the market internals, breadth and sentiment, are at extremes. This is a volatility ETF. So the VIX, VIX, SIBO Volatility Index, rocketed up to the highest level since February. And this ETF is what you can trade the volatility with. Also ripped up to this prior June highs. So it has done its job. Let me show you this, what's called a VIX terms structure. And all it's doing is showing the prices of the future months of VIX futures. It's that simple. When each month is higher than the preceding month, like it is here December through May, that's what's called contango. And that creates drag on these ETF products, and it's normal to be in contango because people are willing to pay more money to have protection in the future where things are uncertain. But notice that currently the spot price of the VIX, 21.98, is making this in what's called backwardation. Again, don't worry about the terms. What this is signaling, though, however, is the October and November prices are lower than the spot. So that is the VIX futures traders also saying, predicting, that the volatility is going to contract. You see the VXX gapping down here with the market up. So our strategies under the master trader method of trading volatility, we use the VXX and the spiders together. We will be looking to sell out of the money call spreads because the volatilities on these options are through the roof. We're going to be looking to sell out of the money put spreads once we get bullish setups. That was our bias yesterday also, but just because the market internals did their job, you then have to come to the charts to look for a bullish setup. So this is just the 15-minute chart of the spiders. Let's look at, this was pre-market yesterday, and we did start nibbling on some out of the money puts. I even sent an alert to our weekly subscribers saying, hey, if you can do it on your own, that you can start nibbling, and it failed. So we still have a downtrend here on this 15-minute chart. The afternoon sell-off in these indexes were very vicious. Dow was down 700 points at the low, lost over 5% in 2 days. But now with today's gap up, we are breaking this downtrend. That's the spiders, the gap on the diamonds here, breaking the downtrend. IWM has been lagging, so I'm still going to stay away from that one. Qs, nice gap. That's a very bullish gap. So these we would be looking to sell put spreads on with the very high volatility, possibly day trade long. As I mentioned, we still need a bullish setup on the intraday charts within the first hour, and that's exactly what we'll be monitoring in the green trading room. But you can see these daily charts, they have damage. We've been saying after last week's Thursday and Friday rout through selling through major support levels, we said, hey, that was a major shot across the bow for the bulls. The weekly, you can see an M top engulfing. So don't expect new highs in these markets anytime soon. There's been a lot of damage. We're just talking short-term day trading. Maybe we get a swing trade, 3-day bounce, and then we'll see how deep. It's now the bulls' turn to see how strong they are in this bear collapse. But the market internal said, yes, we are ready for a snapback. Just a couple sectors here. XLF got shellacked. We'll look at a few bank stocks in a moment here. Internet stocks, FDN, that's a nasty weekly breakdown. The IYT is the transports. That got everything. We actually started selling some out of the money FAR 180 puts here that expire next Friday, and we'll be looking to add to that position. And these are the type of things we want. Way oversold dailies, but the weeklies still being at least either in uptrends or at least sideways trends. So this one is still technically in an uptrend. Here's a higher high. It hasn't made a lower low yet. It's a bearish retracement, but selling puts is we're just putting money in our pockets saying it's not going to go below 180 in a couple of days. ITA Aerospace got shellacked. This is another one we'll be looking to sell puts on or put spreads. ITB with the rising yields. The home builder sector here keeps to be under pressure here. Look at that weekly, monthly, daily crack, all time frames. That's very bearish. Let's look at a couple of these bank stocks since they're announcing earnings and see if we have any interest in those. Wells Fargo here, bearish, daily, weekly. It's approaching support on the weekly. It's not clean. I have no interest in that. PNC is gapping down, still in a downtrend on every one of these time frames. I have no interest whatsoever in a long position in PNC, and neither should you. JPM gapping up, slicing through this resistance. We'll keep an eye on it, but it's still damaged. These would be short-term trades. City also breaking out here a little bit, but no interest. I'd rather trade the SPY at some of these ETFs. Let's look at a couple of the FANG stocks, and then we'll end it. Apple, nasty crack. It's damaged on the weekly. Now, we love selling puts and put spreads on the day of expiration, which is today, Friday. Again, our strategy is that we have to wait for an intraday bullish setup. It might be 15-minute high, it might be 30-minute high, it might be a controlled pullback into the gap on support, maybe a double bottom, maybe a breakdown failure. These are all things we monitor in real time in the green trading room. And then send alerts to our subscribers like you. Amazon got way oversold, gapping up, so this is a great candidate for selling a put spread today. I will be watching that. Google gapping up over resistance, oversold. This will be on our watch list to sell a put spread for today. Netflix, it's a damage pattern, but again, if we can get good juice, we call it, good premium for a far out of the money put spread, we will be looking at that. Tesla, just put this on your do not trade list. It's too gappy and erratic. I think we can find much better opportunity in these other ones. And finally, Facebook, it's gapping over resistance. So Again, that's a downtrend, daily, weekly, monthly's cracked. I would only be interested if it was a one-day put spread. So that's it, folks. I hope that helped for our game plan. Happy trading, and we will keep you advised as always.